If you're a first-time homebuyer or buying a property for investing, I'm going to give you a few warnings here of the dangers that you might face if you're to plunge in the six-figure investment right now. And I'll also explain how divorce rates have an effect on the housing market. I personally don't believe that the housing market can continue going up like the rates that we saw this past year. We're already seeing signs of the housing market dropping a little bit, and we might have further to go. Later on this video, I'll give you my estimate for when I think might be the best time to be purchasing real estate in the future. And because this is a Monday video but released on Tuesday because Monday was a bit busy, I'll be going over my TFSA portfolio at the end of this video to show you guys what I bought in the past week. If you guys are new here, my name is Daniel, and here we talk about stock market investing. But today we're talking about real estate investing just because you can either put your money into real estate or into stocks. And I'm going to explain to you why I don't believe right now is a great time to invest in real estate. So over the past year and a half, if you guys have been keeping up with the news, you'll notice that home prices have soared. I personally sold my apartment for about 30% higher than I bought it the year before in 2019, and the house that I'm in right now has risen at least 20%, if not 30%, since I bought it or moved in November last year. But really, I got in before this entire housing boom because I made the purchase of this property in January 2020 before the pandemic. But a few things really played into the rise of housing prices over the past year. The first thing is that lumber prices went bananas. It literally 5x'd in the span of under one full year. So lumber prices going up by that amount is going to actually cause new home build prices to go up. And if the cost to build a new house goes up, it also brings up the prices of existing homes around it. Coupled with the prices of lumber skyrocketing, we also have the demand for space increasing. As companies shut down or sent a lot of employees to work from home, people required their bedroom to sleep as well as an office space to put their desk in. And for those people who used to make do with a one-bedroom apartment with their spouse, can no longer make do with that space anymore. And with the pandemic striking the world in fear, a lot of roommates also decided to split up because they didn't want to live with other people. So before, maybe there were about 4 people shoved into a 2-bedroom apartment, but when the pandemic hit, a lot of these arrangements decided to split up out of safety. And this also created a huge demand for space. And this also created a huge demand for more real estate. So as demand for space increased, likewise, the price of housing increased as well. And at this point, if you're looking to invest in a property like I was a couple months ago, looking at these properties, none of them are cash flow positive. And usually that's the one beauty about real estate investing is that you can find a property that's cash flow positive, meaning the amount that you pay into your mortgage and all the other fees is going to be less than the rent that you collect. So if you're an investor looking to invest in real estate, right now is not the time to do so. And if you're a first-time home buyer, house prices are still astronomically high. As I mentioned before, my apartment that I bought in 2019 and sold in 2020, I netted an extra 30% gain on that. And my house right now has also risen by an extra 20 to 30% since I bought it. So if you're buying real estate right now as a first-time home buyer, you're entering the real estate market in a seller's market, meaning that it's more favorable for people who are selling their real estate versus the buyer. I believe that you should continue to possibly wait out on buying your first home because one thing is that lumber prices, although they skyrocketed by 5 times, they've also come back down to earth in the past couple of months. It's dropped from around $1,600 to just over $500 today. This represents just over a 60% decline in the lumber prices. So with lumber prices falling dramatically, we should see new homes being built in the future dropping down in price as well, because material costs are down. Sure, if you're buying a new home right this moment, even with lumber prices down significantly, you might still be paying a premium. That's because the builder has possibly locked in material and has paid that premium price in order to build these new houses coming up. But give it a year or two from now, if lumber prices stay where they are today, then the cost to build a house is going to be a lot lower than it was just in the past 6 months. And this cost savings will also be passed on to the buyer of the home. And if new build prices fall in the next couple of years, we should also see existing home prices fall as well. Because again, this is a whole supply and demand market. So if you're looking for a 3-bedroom generic house and you can buy a new build for a lot cheaper than an existing house on the market, of course you're going to buy the new build. So the existing homes are going to have to adjust their prices based on the new builds. And if new builds are priced at too high a premium where there's a lot of profit being made, then we're going to see builders dropping their prices and trying to undercut the competition in order to sell more homes. So for that reason, I don't see these current prices of new builds sticking around in the short term. In Canada already, we're seeing home prices steadily decline over the past 3 months. However, if we compare it to last year, home prices are still up significantly. Rates already at a record low is another reason why I think the housing market could see some downturn in the future, because rates can't really go any lower than they are right now. Rates may be able to stay at this level for the next couple of years, but eventually they're going to have to go back up. So when rates go back up, house prices will naturally fall. There are a couple of factors out there that will be continuing to boost house prices over the long term, and here's what they are. The first one is Canada's population growth. If you take a look at Canada's population graph, it's growing a lot quicker than our neighbors in the States, and this is due to immigration. It's definitely not due to our birth rates because people are having less kids nowadays. So with more families coming into Canada every single year, we can see there's going to continuously be a demand for housing. Divorces is a factor that you've probably never thought about playing into the demand for housing. Because when a couple splits up, each of them needs a place to live. They used to cohabit under one shelter, however, now they need 2 shelters. So the more divorces that happen over the years, and we can see the trends unfortunately going that way, the demand for housing will increase in that sense. We also have a trend where people are remaining single or staying single for longer. And when people stay single for longer or just stay single their entire life, then we'll have a higher demand for housing because households are no longer as big as they were before. Nowadays, it can be common where one person's living in a 2-bedroom apartment versus before, a lot of these 2-bedroom apartments were occupied by families. The last small factor is that people are living longer, which ultimately lumps in with the population growth of Canada. So personally, if I was renting right now and trying to look for buying a home, I would probably hold off and wait out maybe another 2 years or so. I believe that demand for space will go down over time because the people who required extra space for working from home will get it in the next couple of years. And a lot of people are also returning back to work, and some of them full time, so their demand for space is evaporating. On top of that, lumber prices are going down and the future contracts are showing that. And ultimately, everyone knows we're in a seller's market right now because if you're going to go bid on a house, there's going to be at least 5 to 10 offers that you're bidding against. And you're going to have to bid either 100 or 200K over the asking price to get into an entry-level home. So right now, I personally don't believe is the right time to buy if you're a first-time home buyer. Of course, everyone has different needs, and if you actually need the space, then you're going to have to fork up that premium. But if you can hold off, my personal opinion is that it's better to hold off for a couple years and wait for a seller's market to turn into a buyer's market, where you have a lot more choice and you can actually bid under asking. In the meantime, if you're not going to be buying property, then you're going to have cash sitting on the sidelines. And if you guys want to follow along, I'm investing $200 every single week in this TFSA portfolio that I'm going to show you right now. Currently, my portfolio is worth $5,378, and I'm actually back down in the red versus last week. This portfolio took a hit because most of the stock market was down, as well as small caps were hit significantly. Here we can see that DCM took a huge hit this past week, down 8%, as well as Well Health was down 9%. When we were talking about housing before, I used to own Stella Jones, and my sell price looking at these transactions was $44.24. And if we look at the price today, it's $42.72. It didn't drop 60% just like lumber did. However, Stella Jones stock was affected by lumber prices. And if lumber continues to drop, we should also see Stella Jones drop a bit. The company may continue to see a decline in price because they provide pressure-treated wood. So they're not the ones going out there and actually harvesting lumber, but they buy the lumber, process it, and sell it. And if you guys go to a local hardware store like I went to my Lowe's, I noticed that there's a lot of wood there. However, those big box stores right now are price fixing. And the fact that they still have a lot of stock shows me that demand for pressure-treated wood at these high prices is pretty much non-existent. So Stella Jones may also continue to see some headwinds in the short term, and we may see prices decline a bit more. The biggest winner in this past week was Algonquin Power Corp, and I was buying when it was down in the $18 range. It was up 2%, significantly more than the rest of this portfolio. But as for what I bought last week, you can see down here, I bought a share of HXQ. I bought 10 more shares of DCM with another 10 later on in the week. Then I bought a share of TD Bank for $84.71. I got an Algonquin Power Corp's dividend of $4.74. I bought a share of Air Canada as it's on a dip, as well as I bought another share of Power Corp Canada for $39.12. In this week, the stocks that I plan to buy are DCM, because I mentioned in the previous video, I believe that its intrinsic value is around $3.40. And we're also down in this position by about 12%, and prices have come down. It's still a relatively small position in this portfolio that I'm planning to build up through dollar cost averaging. On top of that, if Air Canada continues to decline this week, maybe to the low 24s, I'll add a couple more shares there. And if Bitcoin drops to the low $5, I'm going to pick up 5 more shares of the Bitcoin ETF. You guys may call me crazy, but no one who's ever held Bitcoin for 4 years has ever lost money. So this portfolio being a long-term investing portfolio, I'm going to be holding the Bitcoin ETF for at least the next 3 to 4 years if we don't see another bull run later on this year. TD Bank also had a nice dip this past week, and if it hits $81, I'm going to buy another share to dollar cost average into it. So these are the stocks that I'm planning to buy this week. Looking at some of the comments from last week's video, someone asked, do you think it'd be a good play to buy fractional shares of Shopify stock? Personally, I have a bullish view on Shopify in the long term, so I may actually consider adding some fractional shares of Shopify this week. And another question about the ETF that I spoke about last week, just for precision purposes, why Horizon and not BMO, BlackRock, or Invesco Nasdaq 100? Well, to be honest, I've always stuck with Horizon ETFs, and that's why I go towards them. At the end of the day, if you find a BMO ETF or BlackRock ETF that holds the Nasdaq 100, it's roughly going to be the same thing. Maybe the fees will be slightly different across each platform, but in general, if you're buying an ETF that holds the Nasdaq, you can't go wrong with either one. And right now, with me investing around $500 to $1,000, doesn't really warrant the research into trying to pinch pennies between Horizon, BMO, BlackRock, or Invesco. If I were investing $1 million or even $1 billion into this ETF, then of course I'm going to be paying a lot closer attention to the management fees. But as I said, it's not really worth my time right now to go into that detail for ETFs, especially because ETFs aren't really what I specialize in. If you guys want to learn more about investing, you can sign up for a free trial of Skillshare for 14 days, and you can watch my entire course for free. I'll be throwing up 2 videos on the screen that you might like, including the first episode of this TFSA investing journey. You can check those out. If you're there, I'll see you there. If not, keep up the grind and have a great day.